Hi, so here is a quick little video to explain our appraisal gap insurance program, which is ultimately designed to give you and your buyers more confidence to write an offer with a full appraisal waiver. So I'm going to walk you through kind of the details of it, but feel free to reach out to me and my team if you'd like us to run any scenarios for you or your clients. So starting off, the concept here is that me and my team are here to help you have a higher likelihood of getting offers accepted. So in this market, in my opinion, it's hard to get an offer accepted if you don't go with a full appraisal waiver. So here are some strategies to help you be in a greater position to do that more frequently. So number one is our first solution would be what's called an appraisal gap insurance strategy. So this is designed for borrowers putting at least 10% down with really, really good credit. Okay. And so the option allows you to absorb the shortage into the loan to value. So the monthly payment goes up by maybe $8, but the interest rate and the cash to close stays the same. So you can see here in this scenario, $500,000 purchase price, it appraises at 472. The borrower's cash to close stays the exact same, and the payment goes up by $8 and the interest rate's the same. Okay. So this example shows you even greater detail where if it appraised at 448 or 426, you can see how that payment goes up, but ultimately the cash to close is going to stay the same. Okay. So what this ultimately is kind of designed to is other lenders will tell you that the buyer has to pay the difference if the appraisal comes in low. We provide an alternative solution. This example shows you the appraisal could come in as low as 15% below the contracted price, assuming they're putting 20% down, and their cash to close and their interest rates stay the same. This would give more buyers confidence to write an offer with a full appraisal waiver. It also allows you to be in a position if you have an appraisal come in low where we can save a deal. So it's designed to help you as a buyer's agent get better offers, or as a listing agent potentially save deals. Okay. Now the next kind of way we would approach this is, let's say you've got a borrower that doesn't have great credit or is not putting 10% down. Here would be my second strategy, is that we can still do a full appraisal waiver, but what we're going to do is we're going to rush the appraisal and get it back during the option period. That way they can terminate under the option period since they've waived their right to terminate if the appraisal comes in low with their appraisal waiver. This does cost about $500 to $1,000 extra. The typical turn time is 3 to 7 days. You do need to let me know in advance so I can plan accordingly. It could be a little bit longer if it's outside of DFW. Okay, so those are our conventional options. Now, let's say you're going FHA and VA. I do find a lot of times lenders will tell you, oh, you can't do a full appraisal waiver on an FHA or VA. That's not necessarily true. There are some ways to do that. You can do that on the third-party financing addendum standard, but it's a little confusing. So a lot of times what I'll see people do, you want to talk to your broker or an attorney about this, but I've seen several people basically attach an amendment to the contract, the TREC amendment, and put it in Section 9 under modification. So for example, this is a partial appraisal waiver on like an FHA loan that I saw somebody do. So this just puts you in a position where you have more options. So me and my team are here to help you win more contracts. So we have a whole host of our 12 tips to get offers accepted in this competitive market. If you would like to get a copy of that or discuss any specific scenario, please feel free to reach out to me and my team. My personal cell is 214-763-8008. My team line is 214-586-0517. You can call or text us and we're here to help. Thanks so much.